Good morning, everybody. We'll be starting in just a second. All right, let's get this party started here. Turn my camera on and everything. All right, here we go. Good morning, everybody. Hope everybody's doing great. All right, there we go. Say hello to everybody. We got Devin, we got Cheese Gray Trader, we got James, we got Omar, C. Fazio, Stacy, Steve, Jody, Sassy Trainer, we got Arnulfo. We got JB, we got Ivano, we got Duzzy, we got Lydia, we got Mark, we got Harry, we got Jill, HG, good morning, Javad, good morning, Jill, Piet de Brock from Netherlands is here, John, Flying Ronan, Mike, Keith, Junior is in the house, Matt, Dave, Robert, Lloyd, William, good morning, William, Krish, Eduardo, Dave, Mark, Steve, George, Wardog is in the house. Wade, Gregory, Pete, Dave, Vertuvian. How you doing, Fred? Good to see you. Barbara, Candy, Deanna, Genevieve, Walt, Tony, Gregory, Al, Jason, Hopian, Vernon, Ray, David, Stan, Afadies, Henry, Soler, Art, Julian, Anise, Anise, that's a nice name. Thomas, Angie. Good morning, Angie. Lewis, Richard, Don, Bill. Good morning. Good morning. Good morning, everybody. Mike, Beam Clay, Peanut is in the house. John's in the house. Jeremiah, Jeff. Good morning, Jeff. Angie, Doris, Just Jen, Kurt. Uh, two Kurts, one with a C, one with a K, right next to everybody. Look at that. Gregory, Ann, SB's here. John. Good morning, John. We got. We got Bugs. Good morning, Bugs. People love those outlines that you do. Keep them coming, Bugs, and congrats with your progress. I'm very happy for you, Bugs. Bob. Good morning, Bob. Naples fan. We got. I think I missed a few people here. Yeah, I did. I did. Oh, yeah, yeah. I missed a lot of people here. We got Steve, Sarah, Lori, Frank, Shamens, Penny. Good morning, Penny. Wesley. Good morning, Wesley. JB, Eagle Beagles in the house. Yes, me too. Hoping for peace. John, Mark, Rick, Robert, RP. Good morning, Peter, Debbie, Next Gen, Lewis, Illinois grain farmer, Gustavo. Good morning, Gustavo. How are you doing? And make sure to give Jax a big kiss. Stephen, GBF, Ron, Delbert, Kevin, Stefan, Naples fan. Bob says 77. Nice. William, Mike, Waterford, Jay Blazer, Sergey, Kirk, wow, look at that. That's fast, Bob. Melissa, Bugs, good morning, Bugs. Kevin, Edward, Ira, good morning, Ira. I'll respond to your email in a bit, Ira. I just got it late last night. Nathan, Sylvia, Vertuvian, Sean, Tony, Harold, Rihanna, Michael, Andrew, Kai, excuse me, Peter, Michael, Samuel, Sherman, Stefan, Dave, Chad, Michael. Good morning, everybody. Good morning. I hope everybody's doing great. I had a great night last night. Let me show you real quick. Uh, let me show you what we did last night. Murray came over. We had a great time. He brought some steaks over and we made some ahi tuna and we hung out together. There's Sammy right there, but thank you, Murray. If you're here, I know you're probably driving right now, but I do appreciate you coming out yesterday. It was very nice of you, and the steaks were amazing. Um, Romel, Becky, Richard, morning, Richard from Fuente Gorda, Gustavo. Are you visiting or live there? Eagle Beagle. It does look sour this morning. That's a double whammy. You got Walmart and you got Target. We'll talk all about it right now. I told you guys that the next couple of days we should expect some hanky panky in the market, and boy oh boy are we getting it. We're definitely getting some hanky panky in the market. Okay, there's no question about that. As you can see here, the Dow's down about 140, Nasdaq's down about 41, and I'll talk about whether the structure of the market has changed or not in a few minutes. Okay, we'll talk about that in a few minutes. First things first. If you're just coming in here, please do two things. Make sure you're watching at 1080p because we get to talk about a lot of charts. You see how I'm on auto? You don't want to be on auto. You want to be at 1080p. It gets me all the time too. It'll get you. It'll get you when you least expect it. Make sure you're at 1080. Make sure you're not on auto. Auto is dangerous. 1080p is good. And then, if you don't mind, if I'm helpful to you, um, please hit the thumbs up button one time. If you don't like me, you can hit it twice. But if you like me, you can hit it once. Thank you for doing that. Also, let me just put this in here. This is the VIP room. Yesterday, I don't know where the time went yesterday. Definitely not a day to be aggressive. Maybe to the downside. We'll see where things go. Yep, it happens all the time, Cam. So here's the link to the VIP room. I'm going to be here. Let me tell you what I'll be doing today because I didn't get a chance to finish it yesterday. So I actually didn't even get halfway through yesterday. So let me tell you what's on the agenda. One second. Let me just give that to you here. So I'm going to talk about we talked about how to generate positive expectancy. We talked about that, but we didn't talk about mentality. I want to talk about mentality of trading. I want to talk about options or futures. I'm going to talk about how far out you should go on your options, when you should use limit orders and market orders, when to stay away from day trading, how does implied volatility impact day trading, and I'll give you my top stocks. So here, let me just put that. Let me just put this here. Right here. We touched the surface yesterday on topics above. So today will be continuation. These topics right here. Okay. Yeah, I mean, we barely just I showed you Cyclone yesterday. I showed you the difference between how to achieve high probability and high win rate, but we didn't really go anywhere further. And honestly, I looked at the clock and it was like, it was like, I honestly just don't know where the day went. And also, here is the Cam and Gustavo show link, but we will be having a very special session today in the VIP room, and I'll be answering your questions. And I think I'll have enough time to do options today. So I think I'll be able to give you options and option spreads as well. Okay. Also, before we begin, let me give you my email address. Roger. We're getting a lot of new people coming in because the fall is starting and a lot of people start trading around this time. So I want to make sure you guys get all the info. Please don't ask me customer service questions. I just don't know the answer to them, okay? I honestly don't. Okay. So, and Matt is feeling better. He was working. Yeah, he's working today. He was a little tired. He took an hour off yesterday, but he's back on the clock. I just don't want to I just don't know if he's still infested yet, Cam, with COVID. So I don't want to take chances. So I'm just chilling at home. But he's feeling better. Yesterday I felt in his voice, he seemed better. He's still not 100%, but he's moving in the right direction. He will be working from home. He didn't do any trades in the trading zone yesterday because there was absolutely no divergence. They were literally following each other like this all day yesterday. It was actually uncanny. I don't think I'll ever see that. Will you go over the delta and the option today? Yeah, yeah. Just remind me, Stefan. I will. That has to do with implied volatility. Just remind me in the room, and I will. Here, I'll actually make a note of it here. And delta on option and how it shifts. Okay, there you go. There you go, Stefan. I added it to my list. See right here. Look, delta on option and how it shifts right there. So contain exactly. That's exactly right, Jen. So I don't want to take any chances. I don't want to be a hero and get laid up. I got a big wedding in Los Angeles at the end of this month, and that I can't afford to miss. So I'm not taking any chances. And my best friend's daughter is getting married in LA, and I don't want to miss that wedding. It's my first time going back to LA in 6 years. Okay, what's the small cap stocks that we're looking at today? What is the small cap stocks that we're looking at today? It's AEMD. I want to make sure the stock passes above the 100-day line. In order for it to pass, it's got to get to 225. So we want to be right here before we get in during the regular day sessions. I have no idea if it's going to hit it, and I don't care, but I'm just telling you, look at the volume on this. Look at the volume. This is the highest volume that you've ever seen on this stock pre-open. You see that? See, no history of higher volume. That's already the volume today. So you need two things. You need technicals and you need volume for this. So right here. And then the second one is GRO. And for this one, we need to go above 240 right here. So GRO 240 and AEMD 225. Okay? All right? Just FYI, those are the numbers. Okay. So as I mentioned before, this isn't really huge downside, but this is starting to get beyond random. Okay, as far as Fed data today, a better question should be AMP AM. A better question should be what? Let me see something. Uh, See the problem with that, Richard. I mean, the problem with those, the problem with AMP, William, is look at the volume. Look at the volume here and look at the volume here. See the problem? Volume. And then AEM. I don't know about AEM, but anyways, just wanted to show you that you got to be careful with those. You got to be careful with those. All right, G Boss, no spamming. I'll be watching you. Yes, I do. Let me show you what I use. I use this scanner right here. Let me show you. This is what I do. See volume buzz? Look at volume on AMD. It's 14,580% higher than usual. Okay? Okay. Look at GRO. 1,153%, and I screened them technically. Okay. Now actually, you know what? This doesn't look too bad here. It has pretty good volume. It actually has pretty good volume, but I don't like the fact that volume was higher a few days ago and it already ran up. No, I wouldn't do this. I'd want to see it first run up above 450. That's what I would want to do. If you're going to do 8 p.m., that's fine. You could do APM above the pre-open high, but your profit target would be about 450. My concern is that volume was higher here. That's my main concern. And it didn't run up all that much with higher volume. So that's making me a little nervous. Anyway, but yeah, I use a pre-buzz right here and I use price action. So I use a combination. But yeah, I use a completely different scanner. Completely different scanner that has this pre-buzz here. Bob, completely different scanner. Okay. What reports do we have today? What reports do we not have today is a better question. We got jobless claim. We got Philadelphia. We got the flash. We got home sales. And we have tomorrow the Big Daddy at 10 o'clock. Now, jobless claims, I don't think it's going to be a big burger. I think the big burger is going to be this PMI data right here. Because this is going to tell us if if tariffs are starting to impact us, okay, this will tell us if the here you could see them right here. You could see if the purchase managers are starting to adjust. That's an important report. Everybody's waiting for that report. It doesn't come out till 9:45. Aside from that, I think everybody's going to be waiting for Jerome Powell tomorrow. Okay. So I think we got a couple of different things going on. Got a couple of different things going on. Moondog is in the house. Now we're talking. Okay. So again, we're going to be watching this news very, very cautiously. As the day progresses, we'll be watching the jobless claims. As you know, this thing is broken. If the number's not 270, 280, 290, it doesn't mean anything. It's been exactly the same. It's been right around the low 220s for as far back as I can remember. And I'm talking like 8 years. I mean, it's been just in the low 200,000s. Okay. And twice it went to 275 or 300 and it just went right back up. Honestly, they should do something about this thing because I don't know if it's working or not. But this is what we want to be seeing right here. We want to see all this data and how it shifts away, and you're going to be focused on the bond market because the bond market this is impacting the bond market more than anything. Um, TLT, the bond market. Here's the bond market. What has the bond market been doing since 4 p.m.? It's been going straight down. Okay. It's been going straight down. The bond market has not been going up, and now we're below the 50-day moving average. The next level will probably be about 86, but I want to see if today's news causes the bond market to rally, which will offset some of the downside on blue chips, or come off. Okay, and you could see here the SPY has been just going straight down, and now we're almost here. The levels you want to watch on the SPY, these are important levels. I'm going to give them to you right now. Right here. These are the levels here. Let me do one more here. The levels that you want to watch on the SPY today. Okay. I'm going to tell you right now. Um, Thanks, Naples fan. I appreciate it. The levels you guys want to watch today, especially in the morning. Okay. I'm going to give you a couple of levels right now. You want to watch you want to watch 638. You want to watch 639. On the downside, you want to watch 634.75, 632.96. So again, on the upside, you want to watch 638 and 639. On the downside, you want to watch 634.75 and 632.96. Terrence said, report on local TV says back to school, sticker shock, price up 10%. No, Terrence, no. Terrence, no. Tariffs are not tariffs are not making things higher. No, we're not paying more. No. Just keep listening to what our president keeps saying. Somebody else will pay for it. Right. Yeah. Just like the wall. You remember Mexico's going to pay for the wall? You know who paid for that beautiful wall? You did. And you know who's going to pay for those tariffs? You are. And by the way, I've been saying that now for several months. By the way, I don't want to get into that. I think everybody kind of knows it by now. I don't think it's like a big deal anymore. I don't think anybody wants to argue about that anymore either. Except Boyd will argue with me, but nobody else will argue with me on that. So these are the levels. On the QQQ, let me give you levels. On the QQQ, the levels you want to pay attention to, 568.28, 566.87, 561.70, 558.83. Yes, the trickle down principle. Exactly. Yeah, Henry, right. It's pretty straightforward. Okay, so those are the levels on the QQQ. Um, 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 let me give you those levels on the SMH2. right there. 290, 284.60, and 281.11. I'll give him to you for the Dow too. It looks like you can use them for the Dow today too. 450.55, 450.27. Actually, you know what? Forget about this level here. Forget about 459, 450. Just start with 450.27, 440, 449.35, 449.03, 448.45, 447.35. They're levels of interest, Ira. Both. You don't do anything. These are key levels. I'm looking for the market to bounce. If it goes above one, it goes to the other. If it breaks the other, it can. These are levels. These are key levels of interest. It's not buy or sell. It's both. It's key levels of interest. Okay. Key levels of interest. For example, if we break this level right here, we're probably going to come down. So if we break one level, we balance. We look at what happens around these levels. You see, support and resistance, support and resistance. Okay. You're not supposed to do anything. You're supposed to watch them. Okay. What's the bond market doing so far? Just going down. It's down half a basis point, and the bond market is going to react today. What's the next key level on the bond market that you need to pay attention to? Right here. Right here. 85.94. 85.94 right here. I hope you're writing this all down. 86.75. Right. 86.75. 86.37. Write down these levels and then one more here. Here. 86.52. 86.62. These are the levels for the bond market today, okay? Because we're going to have a lot of back and forth. So I want to know, basically, if we come up, this is how it works. Let me explain to you how it works, Ira, very, very quickly. If we come up to one level and if we don't break out of that level, then the odds are we're going to come back down. If we break the level, the odds are we're going to traverse to the other side. Capiche? So why are these levels important? If we break the level with gusto, we usually break the level, bounce back at the level, and continue going higher. If we break down, we either bounce here for a while, or we break and come back up, or bounce and come back down. So these are the key levels. Okay? US dollar. What's the US dollar doing? Absolutely nothing. Absolutely nothing. Zero. This is not a big move, but it looks like it wants to go a little higher. If you want to call it that, I mean, look at this range. This tells you that global markets are not really on fire right now. You can, Cam, but it's not for stocks. Usually for indices, and it's just not. It's not. I'm going to explain people how to use it. I'm going to have a class on it. Most folks just don't know how to use it yet. Gold. What's gold doing? I'm going to have one of those classes on volume profile one of these days, and market profile. But that's more of an advanced class. Again, what is gold doing? Nothing. Are we still in this range? Yeah, matter of fact, it looks like we're going a little bit higher. I mean, we're now above the 50-day line here, so we're not really breaking down. So again, I wouldn't be liquidating anything. Again, remember, folks, bonds, gold, and bonds, US dollar, gold, crude oil, that's what drives prices, okay? That's what drives prices. Crude oil. Crude oil is turning higher, but again, this doesn't look like there's a lot of junk here. A lot of junk here. So most likely we're going to stay right here in this range. Okay. Now, gold is range bound, crude oil is range bound, US dollar is range bound. Bond market is starting to break down of its range. I'm going to go ahead and here, I'll just put this down here. Keep an eye on these levels. If this starts breaking down to that 80, 85, 96, excuse me, level that I already gave you earlier today, we may have some problems. We may have some problems. So keep an eye on the bond market, and we will keep an eye on the bond market right here live when the news comes out in a few minutes. So we could, excuse me, so we could see how price traverses these levels, okay? Rob, I've explained Vold many, many times. If you have Trading Zone Live or Alpha Zone Pro, it's in there for hours and hours, okay? Hours and hours. Green is 100 days. Green? I don't think I have green here anywhere. I don't think I have green here anywhere. I have red, white, and blue. 100-day is white, Jeff, white. That's this right here. That's the 100-day right here. See, moving average 100-day right here. Or maybe you're talking about bar chart. Bar chart, yes, it's green. Sorry about that. Now I understand what you're saying. Yes, Jeff. Yes, yes, yes. Yes, 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 yes. The mustard colored line is the 200 line. The red is the 100 and blue is the 50. Okay. Sorry about that. It's just hard to do it on, the background is not, I can't do white because the background is white. All right, let's put everything together. I was kind of hoping to get the jobless claims report. Is anything else happening? And Philadelphia manufacturing. So it's going to be a double whammy. Yeah. So we definitely want to watch the bond market. Real quick, earnings. Just wanted to kind of share this with you. Walmart is coming out. Intuit is coming out. Okay. And we'll talk about these as far as catalysts in a few seconds. Okay. Again, I'm just waiting to see what happens to the bond market in real time. And right now, the bond market looks like it's bottoming out. By the way, notice the level it bottomed out at. And now we're coming up. Now, see, Ira, if it can pass 85, 86.52 with gusto, it'll probably hit 86.62. If it can't pass this or struggles like this, it'll probably just come right back down. If it passes this level, it'll probably come up to this level. Wow, Bob, that's fast. Whew. It used to take us an hour to get here. Yeah, or come to customer service live and they'll show you how to use the Volt. Here's the link, by the way. Here's the link, customer service live. The Cam and Gustavo show from 10 to 1 every day. And here's the link to the VIP room where I'll be talking about all the stuff that I didn't get a chance to talk about yesterday. Okay. Here's the VIP room link. And let me give you now the customer service live link. Let me give you that. There you go. That's customer service live right there. Yes, G-Boss. Yes. Yes. Everything. Yes. In Trading Zone Live, we actually do e-minis and options on SPY, and I'll talk about that today. Okay. Now I want to show you guys something interesting. Obviously, I can't predict the future ahead of time, right? Look where the bond market just topped out. So Ira, this is to you, Ira. Look at the candle. Look at the height of this candle. Do you see what it just did? Look where it stopped. Do you guys see where the candle stopped? More importantly, look at where my candle stopped, Ira. Isn't it interesting that price just went up to 86.62 and just dropped down? Do you guys now see the benefit of having these levels? Look. Probably pretty good to have on your charts, right? So how close did our level come? I just want to ask you guys, how close did our level just now? I drew this live for you guys. Price did not go up here beforehand. Price was down here when I drew it. How close did we come to our level? So if you think these levels are not important for you guys to have on your charts, well, I'm not going to even say anything. Look at that. That's why you put levels on there. Now, if it breaks 86.62 with gusto, it'll probably go to 86.65. But you see how well my levels hold? Don't you want to know the levels that holds? Literally. Okay, Ira. Now look, see how it's getting stronger near that level? This is much more important than the actual number. I could promise you that. Again, see how it stops there? Now it's breaking through. Now it's breaking through. Let's see if it can go to 80. Now let's see if it can go to 87, 86.75. So again, these levels are really important, okay? And let's just see what happens. But now let's look at the report real quick. But I wanted you to see why my levels are important, or at least why I think they're important. And if you don't think they're important enough for you, don't worry about it. Look at the moving average. Remember what I said? Low 200s. This is low 200s. This is the same shit we've been seeing for the last year, folks. Up to 240, down to 210. Up to 240, down to 210. Look at the average. The average has been about 225 for for as far back as I can remember. And what is the average now? 226. What? Some moron is going to say that the numbers are higher. They're not. This is just what they've been. And the bond market's going up, which is giving us a little tailwind in the market. Okay, but wanted you to see what I was talking about there. Here, let me see. Couldn't get past this level. Now it's going to come here. But when it gets past this level and bounces, it usually comes up to the next level. Okay, so the report was. There's nothing here. There's nothing here to talk about, okay? What about manufacturing? Ooh, wow. Oh my. Look at this. Look at this, guys. Look at this. They were expecting consensus was 8. They were expecting 2 to 13, which is like so they were hoping for 8. When you see the expectations wide like this, that means they have no idea what the hell to expect. Usually they narrow it down. This means they're open for hoping for anything positive. Negative, negative, negative. That's negative. That's negative. It's not a good number. It's not a good number. It's not expanding, okay? It's not expanding. The manufacturing is contracting. Okay? Do you think it's a good idea to lower rates when manufacturing is contracting? The bond market doesn't. Okay, now you see how we're traversing here, Ira? See, Ira, you asked me a question and I'm showing you an example literally in real time with real money. See how we traverse this area? The next resistance is here. If we had trouble getting through here, I wouldn't be talking about this. Why do you draw levels and not zones? I don't know. I don't know. What's the difference in a level and a zone? I mean, what's the difference? I don't even know what the difference is. Good question, but what's the difference in a zone and a level? So again, now we're going to see if we come up here, that's going to be the next resistance. So now we're traversing. Now we're going to see if we can backstop here and then hit this level or directly hit this level. But at least this gives you something to work with, okay? The bottom, this is Hakinachi, and this is volume. This is ATR, daily ATR. I only use daily ATR. Volume, ATR, Hakinachi. Okay? So again, just wanted to show you, this is a bad number. This is a negative number. This number tells us that the Fed should not be lowering rates right now. I'll talk about it. CMT, I'll talk about those levels. I'll talk about those levels. Just not right now. So not a lot going on with commodities. Let's see how this is moving the stock market in real time. It's nice to do this with you guys in real time. It's not really moving the market at all. QQQ, not really moving the market at all. SMH, not really moving the market at all. Dow, not really moving the market at all. It's a nothing burger. Nothing burger. Okay, let's break things down. Does anybody have the catalysts for today? Because if manufacturing is down, that means the economy is not that strong. And if the economy is not that strong, that means the Fed should not be lowering rates. You know, that they're going to take, the odds are they're going to take less action. That's all it means. Okay, John says manufacturing. Let's see here, manufacturing. Yes, manufacturing, existing home sales. Now, John, folks, when did Target come out with earnings? Target came out with earnings yesterday morning. John, we were talking about Target earnings yesterday morning, and we were talking about Lowe's earnings yesterday morning. Why are they a catalyst now? Why would they be a catalyst right now? That that that's already passed us by. Anybody else? Okay, Richard says PMI, Fed data, HP, yep. Walmart. What is LEI? LEI. What is LEI? What is LEI? I'm sorry, I missed the last one. All right, here we go. PMI, home sales, jobless claims, Walmart, Fed. Well, Fed data. PMI, jobless, kind of weak. All right, let's see here. Anybody else? Anybody else? VIX isn't. It's VIX is doing nothing because that's based on the S&P 500 options. Okay, so here's what I've got. I've got Fed, housing, manufacturing, Walmart, HPE, Infotech, and there's one that you guys are all missing. BABA, China, e-commerce, BABA. It influences international stocks. It does. BABA. It does. So you guys got everything except BABA. HP, definitely. That's Infotech, by the way. Walmart, BABA, manufacturing, industrial, housing, and basically the Fed. Okay, let's continue. Let's continue. And folks, if there's any questions here that I'm not answering, and I mean, there's 677 people here. Let me. You got Babo, Matt? Okay, I don't think I saw your. I don't think I saw yours, Matt. Fred details retail and Baba. Well, retail is Baba, but definitely retail. Yes, definitely retail. Walmart is retail. I think you got it right. You got it right, actually. The only one you might have missed is. Let's see here. You guys are getting close. Yeah, Richard, you got it. You got it. And yeah, you guys are getting it. Matt's getting it. You guys are getting it. Wouldn't lowering rates stimulate the economy, help manufacturing, create jobs? It's not about that. Remember, good news is bad news. Bad news is good news. He did get it, Henry. You're right. You're right. He did. I just didn't see it. Do I ever consider Trump's tweets as potential catalysts, depending on what he says? But no, usually no. I don't really listen to anything that comes out of Trump's mouth. Yeah. No, I don't listen to anything that Trump says. I don't think anybody listens. I don't think Trump listens to anything he says. Okay, let's continue this. Investors await Federal Reserve's gathering at. That's why we may be having slightly muted market today. We have Walmart reporting. We talked about all of that. The minutes of the Federal Committee released Wednesday showed that officials emphasized the risk of inflation as outweighing concerns about the labor market. You see that? That lowers the odds that they're going to be lowering rates. Policymakers acknowledge concerns about higher inflation and weaker employment, but a majority of participants judge the upside risk to inflation as the greater of these two risks, according to FOMC minutes. So what's happening now is, so let me give you my interpretation. Okay, The White House knows, I'm not going to say Trump, the White House knows that the economy is in a shitter right now. It's going to slow down. One of the biggest reasons why they were pressuring Powell to lower rates is because they wanted him to lower rates before the shit hit the fan. Excuse my French. Okay. Well, the shit is hitting the fan right now. And if we give it another couple of weeks and the Fed, if we give it another a little more time and the Fed doesn't lower rates, the economy is going to be at a point where it's not going to be practical for them to lower rates. And that's the fight that Trump is having with Powell right now. They know that things are going to get bad and they want rates to be lowered in anticipation of that. Powell is saying, no, I'm not going to do that because employment is bad. So it's a fight. It's a fight between who's going to win the race faster or what data is going to come out faster. That's all I want. I just wanted you guys to explain that. But things are not looking good right now. Things are not looking good. And most of it has tariffs to blame. So Trump is trying to undercut that, and Powell is saying, no, 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 no. We're going to play this out. We're going to play this out. And that's what you should do. You should play this out. Because you can't keep firing people because you don't like what the data is. That's just not going to get us anywhere, okay? Yeah, it looks like they're setting up for no rate change in September meeting if things stay the way they do, Jeff. If things stay the way they do in the next couple of weeks, okay? Policymakers acknowledged, but again, higher inflation, weaker employment, majority of participants judge the upside risk to inflation as the greater of two. And it is, of course it is, especially when tariffs are about to hit the fan. Several participants emphasized that inflation has exceeded 2% for an extended period of time. And this experience increases the risk of long-term inflation. Basically, things were getting a little better. Now, Trump said lower rates, lower rates, lower rates, because they knew that we're going to have a lot of pressure. And Fed's like, no, we got to see how bad the pressure will be before we lower rates. So it's a game between those two, those two things. Officials noted that it might take time before the full impact of tariffs is reflected in consumer and service prices. Now, folks, I'm going to read this to you again. It's only hit the producers. It didn't hit the consumers. It's going to hit the consumers the next CPI. You understand? And what Trump really wanted was for Powell to lower rates before that happened. And Powell said, nope, not going to do it. So many officials noted, read this 3 times, that it might take some time before the full impact of tariffs is reflected. We're not there yet. We're not there yet. S&P dropped to a 1.5-week low. NASDAQ 100 fell to a week low. These are all our catalysts from the last couple of days. Notice how they're all shining their bright picture and their eyes right in front of our face. Right. There's no inflation, of course. Yeah. There's no inflation, RP. Right. Yes. Everything is perfect. Everything is perfect according to the White House. Yes. Of course. Yes. And I'm teaching Clyde how to speak French today, too, if you believe that. Target dropped more than 6% after the retail appointed someone to take over somebody else's job. ADI climbed over 6%. Nice gainer yesterday. The Kansas City Fed's symposium kicks off in Jackson Hole. Remarks, everybody's waiting for this, and he's going to say, hey, things are just not looking that great. Inflation's still at 3%. Yes, prices are going to come down on day one. Well, we all know we're all paying lower prices, right? I mean, we're all paying lower prices than we were 6 months ago, right? God help us all. Hey, Cam, don't you track prices? Don't you track prices? Is anything cheaper than it was 6 months ago? Yeah, if I actually agree with what Kevin is saying right there. Look what Kevin just wrote. I actually agree with what Kevin just wrote. Right. None of that. None of it is happening. Okay, 81% chance of a. We went from 100% to 80%. We can still go to 60 if the numbers are bad today. By the way, let's see what the bond market's doing. Okay, so look, we couldn't get up to this level. We traversed back down, and this is going to be the support right here. These levels are very, very useful. Very, very useful. On the economic data front, all eyes are focused on the S&P Flash US Purchaser Manager Survey set to be released at 9:30. They will give us an update snapshot of how tariffs have impacted both activity and price. Well, Seth, you obviously believe everything our president tells us, right? Gas, eggs. Everything's gone lower. Interest rates are lower. Housing is low. Everything is better now than it was 6 months ago. School supplies are not going up 10%. Doll prices are not going up. Forget about all of that. China will pay for it. Yeah, that's the ticket. China will pay for it. Yeah, that's the ticket. Okay, Rick, you keep telling yourself that. All right. So you guys see what we're waiting for? Why this report is really important? 9:45, excuse me, 9:45. 9:45. Big report. Look economic models forward looking. They decide there's no need for rate change, rate increases. My coffee has gone from $8 to $14. Really, Cam? No, no, Cam. That's fake news, Cam. That's impossible. No, no, Eagle Beagle. No one's firing anybody. PE ratios on stocks are not the highest they've been in history. No, no. All this is nonsense. All this is nonsense. Let's continue. So the number came out really good on the jobless claims. Earnings front, we have Walmart today. That's going to be the big daddy. Europe is down 0.31. They're getting defensive. China, fintech rallied. Fintech rallied. Fintech. I like fintech. I like fintech. Really like fintech. By the way, remember that stock I gave you yesterday at the end of day? It went to 255 in the morning session. Look at that. 245, 255. We got out of this trade. I thought it was going to be a swing trade. It ended up being like the fastest trade we've had in a long time. I had to apologize for being too fast. Nikkei closed lower, falling for the third session as investors continue taking profit. Pharmaceutical and auto stocks led the decline. Tech stocks slumped too, tracking U.S. overnight prices. Let's see what the market's doing right now. The market is slumping right here. Yes, very entertaining, Eagle Beagle. Very, yeah. Sylvia, no, no, no. You can't say that. That's fake news, Sylvia. Wink, wink. I'm being sarcastic, Sylvia. Of course they are. They're way higher. Uh, Faster trade we didn't have. Yeah. What I found from India, tariffs had tariffs a long time. All right. So this is not great. This is not great. All right. Let's start talking about stocks. Okay. How are rotations looking? Let's see how rotations are looking. Now, this is where you guys should really pay attention. This is important. Look, honestly, I don't get too political, but all this stuff about things getting better from the White House, it's laughable. That's all I'm going to say. Look, let me ask you guys a question. Let me ask you guys a question. Here's a good question. A real simple question. Who thinks that things have gotten better overall in the last 6 months? Type in yes in the chat. If you don't think things have gotten better, don't type anything. But if you think, we're going to do a little survey. If you think things have gotten better, economy has gotten better in the last 6 months, post yes in the chat or just don't post anything. I don't think anybody's going to post anything, but I'm just curious how many people are going to post. George, let's see how many people. No, no, no. Just post yes. Just post yes if you think economy got better in the last 6 months. Eagle Beagle, you think economy got better in the last 6 months? Wow. Huh. Okay. Oh, okay. All right. Huh. Interesting. Okay. Yeah, a lot of people do. There you go. See, that's what I mean, folks. Some people think that economy got better in the last 6 months. I don't know what they're basing it on, but okay. Um, okay. Huh. Wow. Okay. All right. All right. Let's continue. Let's continue. Let's continue. Hmm. All right. Okay. Let's look at technicals. Let's look at technicals. The key levels you want to watch today, folks. I don't know, Jeremiah, but I don't know. The market was at an all-time high when Powell was at the office too. Huh. Okay. Huh. Interesting. Huh. Well, good to get feedback from people. Okay. High and lows, folks. High and lows, and yesterday and this level right here. These are the levels you want to watch on the SPY. Oh, okay. It's better as far as not crashing the plays goes. It will take some time. Uh, huh. Interesting. Okay. All right. Just wanted to know what you guys thought. It's always good to hear. I mean, this is the first time I'm asking this question. So these are the levels you want to watch for the day today. You want to watch yesterday's high, which is right. Notice something. We're right at the 8-day EMA here. Okay. Right here. All right. Right here. Right here. See how the 8-day EMA, the 639.97 level, very important. QQQ. Let me give you the levels you need to know for today. The high and low. We already have a level at the low. I'm going to put one at the high, and that was a high volume candle. I want you guys to know something that if we break 568.59, we're probably going to come right back above this level. So this is a very important level. And a prequel to that would be right here, 565.84. That's what I'm doing. I'm doing the numbers. Mega caps. I hate to say I told you so. Now, I drew this for you yesterday. Now, Ira, remember you were asking about these levels? So look at the overnight low and look at this level I drew for you yesterday. Look, I drew this yesterday or like 3 days ago, or maybe even more. Look at how the overnight level holds. Look at how the overnight level holds. Look at this, guys. 1, 2. Okay. Okay. Right here. These are the levels. Look how well they hold. Look how well my levels hold. Very important. Okay. All right. Let's continue. Let's continue. RSP. I like RSP. And notice again, RSP, is it really selling off? No. I warned you that money was going to start coming out of MAGs and into RSP right here. Okay. So we still have stability here. We still have a chop, chop, chop on the broad market. Why did I tell you not to panic yesterday when the market started selling off? Because we were still in chop land. Market internals were not that weak. There wasn't 1,200 stocks breaking down. Okay. All right. Let's continue. Let's continue. RSM, SMH. Again, these are really important levels that I'm giving you right now, right here. If we break 290.06, this thing can really rally, but it doesn't look like it right now. Remember, everything can change. We have Fed data. We have news coming out, 288.89. So again, I'm writing these levels for you so you have all of these levels for yourself, okay? 288.91, 290.15, and 290.06. Okay? I'm going to do that with IWM as well, Richard. IWM is in a different world right now. It's right now right at the 15-day. I think this level right here, this VWAP from the previous high is going to hold, or this support level. So right here, right there, and right here. 226.29 and 223.71. Okay? Okay. Okay. Do we have clarity here? Do we have clarity here? So let's go back 1 week. Look at this. Look at this. This is beauty right here. This is a very strong market. This right here today, look at it today. Technology, semiconductors, Bitcoin, communication, consumer discretionary. Notice it's all right here. Yeah, Ira, that's why I draw those levels because they're spot on. That's if it wasn't, I wouldn't be drawing them. Um, and by the way, I drew this level a while ago on the IWM. Look at the high. I drew this a while ago. Look how close we came to it. So they work really well. Otherwise, I wouldn't waste my time doing it. Okay, let's continue. Let's continue. Folks, I just wanted to know. I never asked that question before. I just wanted to know if people thought that we're better off than we were 6 months ago. A lot of people do. Um, right here. Everything that was up here is now down here. That does not bode well for spec stocks at all. At all. That does not bode well for tech stocks. Okay? Does not bode well for tech stocks. Let me just see something here. Okay. Oh, I can't do it today, Ernest. I have to do it when I'm in LA in a couple of weeks. They don't have any good stores here. They don't have good stores here. I have to go. I got to go to uh, a big city. Now, Jeff is asking me a really good question right now. Jeff has asked me a really good question. Sector rotation. How often do you normally see it? Jeff, I'm going to answer this question for you because it's a great question, but I don't think you're going to believe me if I give you the answer. Okay? All right. What if I told you that 2 years ago, a year ago, we would see sector rotations maybe every quarter or every 6 months? We're now seeing sector rotations every other day. Okay. So I'm gonna explain this to you again, real quick. Okay. I don't have to be anywhere today, so I don't have to rush. A couple of years ago, you would see semiconductors to here 6 months, 8 months straight. Heck, 5 years ago, for 9 months. Here, let me show you something, Jeff. This is really important because this takes the discussion to somewhere in a very important place. So I want to show you something, Jeff. See this right here, S&P Strength Monthly, right here. Okay. 4 or 5 years ago, if I was to press this button, I would see the exact 10 stocks here going back and forth for 8 to 9 months straight. I remember when Amazon was the number one stock for 6 months in a row. Which means, you know how right now I tell you, hey, we're looking at these stocks, we're looking at those stocks. In other words, we'd be able to stock using the same strategy, the same stocks almost daily. The market we have right now, I mean, we're having sector rotations the last 2, 3 days. The last tech sector rotation we had lasted a day. So it is a great question. He's asking a very good question. So this we are seeing one of the reasons I keep telling you this is the most difficult market I've ever traded in my life. It's not because the technicals have changed. It's because we're seeing sector rotations happen um, every other day instead of every other quarter. There would be periods, Jeff, where utilities would just go up for 7, 8 months straight and just touch the 8-day EMA and come back up. And there was a period, Jeff, there was a period 2, 3 years ago where we were able to trade GE as an alpha top stock like 10 times in a row. Basically. So, okay, so I'm not going to boast, but our win rate since we closed Lulu. So let me show you something. We closed Lulu right here in the pit. And this is why I say to get a win rate the way we're having right now is out of this world. It's not something normal. Now, let me show you something. In the pit, the last loss we took was on this date right here. It was on 7/3. It's 7 weeks ago. I asked them to calculate how many trades I've given you guys since this date. The number was 45 trades in the pit as of yesterday, all closed except for Roblox. Okay. Our win rate is 44 winners out of 45 trades. If Roblox turns and goes back up to where we wanted to, we haven't got out of Roblox yet, which is right. It's holding the 50-day right now, and it looks pretty strong. If Roblox comes back up here, then that would have been 45 winners in a row in this market climate where most folks can't even get 30% right. So if you take all our bonus trades and if you take all our trades, we've had 45 trades and 44 winners and one open trade. Now, in my opinion, that's some crazy shit. Okay. I wasn't going for a record like that. Maybe I should take vacations more often. But I want you guys to understand most people can't even begin to trade in this market. They wouldn't be able to last a week. We've had 44 winners that we've closed and one open trade since that time. Okay. You can call customer service. They will tell you. And the reason for that is because of what Jeff is talking about, because we're having sector rotations. If you've been following me, I don't know if some of you remember, but we would have periods where communication, chip stocks, where it would be like the same for 6 months, 5 months, 3 months, 2 months, Jeff. Now, every other day, which means there's no follow through. Also, this is the first time in history I remember not having over 100 stocks consistently on my 90-day lows, which means there's no momentum. So we've been having a 100% win rate, 44 or 45 stocks in a row without any momentum during the summer. Oh yeah, without any momentum during the summer, without any momentum during the summer with complete sectors doing this. Okay. 90-10s, we haven't seen that many 90-10s because these turnarounds are not big. But here, you could see them right here. Here's all the 90-10s, 65 of them. Not enough. Not enough. I want to see 90-10s above the 8-day EMA. See, Jeff, if the bar and majority, okay, he's asking another great question. I can't resist good questions. I love good questions. So, Jeff, here's the answer to your question. You want to see 90-10s. Let's do NVIDIA, okay? See how a lot of stocks are doing this? That's a 90-10. The problem is they're closing below the 8-day EMA, Jeff. Okay? So, yes, I would love to see all these 90-10s. I'd love to see all these 90-10s. The problem is The majority of them are all closing below the 8-day EMA. Look at SMH. Look where the 8-day EMA is. I want this crap to be above here. This is what I was saying earlier today. Notice I have my lines right here. I want all these 90-10s to be above this. This doesn't tell us anything. We got to get back above the 8-day EMA. So yeah, you got 65 of them, but 99.9%, or if not 100, every one of them, look, is below the 8-day EMA. I could just tell by looking at them. The 8-day EMA is like around here somewhere, right? Around here. Look, every one of them is below the 8-day EMA. Every one of them. Yep, every one of them. Look, every one of them. SMTC, yeah, every one of them. Every one of them. We want them to be up here. So you are right, but they're not ready yet. Do you think the rapid sector rotation is here to stay? No. I think it's happening because the markets are choppy. When markets are choppy and not trending, sectors just they can't. That's why I do this every day. The reason I do this every day is to show you. Okay, so Jeff, you're a troublemaker today in a good way. I like it. You got to keep being a troublemaker like this because you're asking great questions, and I love great questions. I love great questions. So when you have volatility and no movement in the market, or in this case, not even a lot of volatility, you're going to see choppiness. When you see choppiness, you don't have any follow through because, and this is what I try to explain to you guys. If I have chips and technology and semiconductors up here, right? A chip fund or a tech fund that has both of them, they're going to buy both of them, right? Well, it's going to combine them. It's going to put them together. But when one is up here and one is down here, that means there's this happening, just a bunch of chop. And that's why I keep showing you not which ones are next to each other, but also where they are in the mix of things. And have you noticed 1 week they're up here, 1 week they're up here, 1 week, just because we've been doing this. We don't have any directional clarity. We had directional clarity for 1 day last week. And you know what happened the next day? Look what happened. This is what happened right here. This is what happened right here. This is what happened right here. These days, run days. It's hard for the market to run when they're all over the place. Okay? Good question. So when you have a lot of rotations, that means markets are sleepy, dead, and not doing anything. And that represents itself here. And more importantly, how many stocks are making 50-day highs? How many stocks are making 50-day lows? How many stocks are look, 54 stocks are making 52-week lows. 58 stocks are making 52-week lows. 31 stocks is making 20-week highs. 5 stocks are making 20-week lows. 50-day high, 49 stocks versus 50-day. Look, there's no momentum. There's no momentum because the sectors are just doing this. When they're in line, they can be in line for weeks and months, which makes trading 50 times easier. You know, all we have to do, Jeff, all we have to do is find stocks that are breaking out, put an alert at the 8-day EMA, they come down to the 8-day EMA, and then they just bounce right back up. And they just keep doing that for months. It makes my job 50 times easier. 50 times easier. Okay? And the SPY during the day actually moves because the sectors are aligned. Not seeing that right now. Okay, let me give you stocks that I'm looking at, and then I gotta get out of here. I gotta get ready for the session. So let me do that right now. So let me give you stocks that I'm looking at. Only look to right here, okay? Short list, eToro, below the American flag. Actually, are we below the American? It's not. It hasn't been trading long enough to know. But we're bearish. FRPT, Fresh Pat, below the flag. See, red, white, and blue below the flag. Seat, OPCH. Tech. This is how stocks were trading. Look at this, and then look at this. Nice, clean movement. Hits, almost goes to the 15 and bounces back. Imagine this would trade this way for like a year, where it's just moving like this and it's just coming down and up. That's normal trading. Okay. All right. Um, Kins. Root. Buck says trading opportunities abound, so be patient and don't chase. Yeah, don't chase. That's right. They all the time. Exactly, Cheryl. Exactly. Cheryl explained it exactly perfectly. Yeah. You guys are getting it. You guys are getting it. All right, let's continue. Let me show you the long stocks now. W. This is how, Jeff, this was a normal trading for stocks. This is how stocks looked a year ago, 2 years ago. Think about this. Look, buy right here, buy right there, buy right there, and just let it ride. It was much, much easier. We have to work much harder, and trends lasted longer so we could let profits run more. Those days are over for now. MO, Rice. Oh, wrong ticker symbol. Forget about that one. Futu. I like Futu. I like AHR. This is what stocks look like, but not five stocks, hundreds of stocks, hundreds of stocks, hundreds of stocks. Okay. BWA, CBRE. I apologize if you missed it yesterday, but I mean, I thought it was going to be a swing trade. I didn't. It's not my fault. It ran up like a bat out of hell right after we get in. I that was not my intent. I'm sorry. I apologize that we made money too fast. I actually got emails saying, Roger, I've never made money so fast. But the stock still looks good. ECL and NOC. That's all I could find. All right, guys, let's look and see what the bond market's doing right now. Bond market is look what the bond market's doing, guys. So, I'm going to ask you again. So I drew these levels for you early today in the morning. Ira, what do you think about my levels? I did these levels in front of you guys today. What do you think about my levels? Do you think I should keep writing? I should keep doing my levels, or do you think they're useless? Look at the low. Look at where we stopped moving. We went up, couldn't get penetrate this, bounced here, bounced here, tried to rally again, couldn't do it, had a false breakout, and then came back to this level. Okay. So just wanted to show you how well these levels work. CBOE. Oh, it was CBOE. It wasn't yeah, right. Sorry, it wasn't CBRE. It was CBOE. It was this one right here. It was this one right here. Here's what happened yesterday. So here's what happened. It just ran up like crazy at the end of the day, you know? All right. Incredible, those levels. Now the bond market matches the report results. Yes, 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 yes. So just wanted to show you again how well these levels work. And I drew these specifically early in the morning today for you based on this. And look, couldn't go through, came right back down, traversed this one, and came back here. Okay. I'll talk about 90-10 today in the VIP. Let me add that to the mix. I'll talk about the VIP room today. Let me add that 90-10. It's a fun setup. I'll talk about it today. 90-10s were very valuable when markets were moving normally. Now they're a little, Folks, be very cautious today. I'm telling you again, the report that we're going to have at 9:45 is going to tell us if the tariffs are literally hitting us below the belt. Okay, so it's going to give us a good number because this is what they do. That's the Purchase Managers Index. They're purchasing things for retail, so they know the data ahead of time, and this will be a very important report. And this report may actually impact tomorrow's report. All right, guys, I got to get out of here. Let me give you the links again. Customer Service Live right here. Sorry, I didn't mean to get political, and I don't think I did. I just wanted to see how many people thought things are better now than before. And didn't mean to get off topic. And here is the link to the VIP room, but I think we covered everything today. Folks, again, VIP room, I'm going to answer all of your questions. I'm going to get all of your questions. It's all good, Jeff. I'm going to answer all of your questions that I didn't answer yesterday, including when to trade options, when to trade the underlying, why I don't trade. Here, no, there's actually more here. When to stay away from day trading. How does implied volatility play into day trading? My top stocks for today, and just all that other stuff that I didn't get a chance to talk about yesterday. When to use options, when to use the underlying, all of that stuff. We'll talk about that today. How is Han looking? Let's take a look at Han real quick. How do you think it's looking? It's looking like shit. It's garbage. All right. Bye, guys. Have a great day. And again, here's Customer Service Live one last time. Let me give you that just in case so you don't forget. Cam and Gustavo show. Do not miss the VIP room today. It's going to be more fun than what we just experienced this morning. All right, guys. Bye. Have a great day, everybody. Thanks, Cam. Thanks, Gustavo. Appreciate you both. Bye, fellas. Bye, guys. Be careful today, folks. Keep an eye on the that 9 something report. It's going to be a doozy. It's coming out at let's see here, 9:45, 15 minutes after the market opens. Okay. Bye, guys. If you have a question, please feel free to email me, Roger@rogerscott.com. I'll see you all later. Bye.